Bitcoin's dropping sharply. So many people asking me, can we expect more? What will happen here? Is it dangerous to stay here? Can we read the charts like we can do this with the indices, for example, stocks or currencies? Yeah, let's have a closer look because there might more come on the downside. The chances are very, very good that this is not the end on the down or on the bearish market with the Bitcoin. So stay with me and let's have a closer look. Yeah, the first question we need to answer is it possible to analyze cryptocurrencies with the charts? Is it really possible? It depends very much. Bitcoins, for example, is such an educated market with so many players and so long history so that we can easily find out whether this is working or not. We can see, are there patterns, are there behaviors seen in the past? Can we recognize them as a typical market behavior? And then if this is happening like this, then we can say, okay, this should work in the future as well. With Bitcoins, definitely this works. It works so good that we had several ideas here in the past. Unfortunately, not in the English channel here, in the English-speaking channel, but it worked so well in the past. Not, of course, in every time. It's really important to understand that chart technical analysis is not giving us a 100% chance this will happen next. Definitely, no. It's giving us a clue what the market participants are thinking currently. Are they enthusiastic? Are they panicking? Are they waiting for something or whatever? You can see this in the charts by reading the charts, and this is working perfectly with the Bitcoins. You cannot do this with a small cryptocurrency, with a very young cryptocurrency. This is not working because you have too many spikes, for example. It's not the amplitude, the way it's moving. The volatility with the cryptocurrencies is sometimes very high, but you need to have a typical chart technical behavior, and you have this with the Bitcoin. So let's have a closer look and find out what I think about that. So first of all, for orientation, let's have a look at the long-term chart. This is the weekly chart. So this is 2016, for example. We had a rush to 20,000 roughly, coming down severely. And just to give you an impression, this was an 80% drop, or more than 80% drop we've seen here. And now and after that, not now, but after that, we had another rush, not as high as before, but also after that, we had rush down for roughly 80%. Let's have a closer look at this because we need this later. You may think, yeah, this is old things. No, it's something which is indicating that chart technical things are working quite well here because we have the typical pattern of a strong move and a very shaky counter move. This is something we normally use with our indices or with trading stocks or currencies or commodities like gold or copper or whatever you like, crude oil. And this behavior is very typical for the market. And this is indicating that also the cryptocurrencies are working with this. At least the Bitcoin and some few others, and the Bitcoin are working perfectly like this. So we have a strong move sometimes, a shaky to the downside, and typical market behavior in the big picture. But we can also see that sometimes the market is coming down severely, dropping. This is a Fibonacci tool. Some people may know it already, but this is a very typical tool to measure the size of a setback. And the market came down 80% here in this case. This is a really strong setback. We had it roughly here the same with before that, 80%. So cryptocurrencies in general, and especially the Bitcoins, of course, they suffered from this strong drops in the past. But can this really happen now? Do we need to expect something like a drop really sharp? Let's say 80% again. So this, or let's say this one, this is not a big difference. This is the last rush to the upside. Maybe it's comparable to this move or to this move. Do we really need to expect a drop below 80% again, like it happened several times in the past? This would mean that we will go below 20,000. Can this happen? Yes, of course, it can happen. Is it realistic? Let's say it's possible. But when can we decide we are in danger for a big drop? and when not. So let's go to a lower time frame. This is the weekly big picture for the last few years. Just let's check a little bit closer here the movement we've seen here in the last year or many months. This is the daily chart, for example, to give you a little bit a better impression. And you can see that also here we have this typical pattern, like a strong move to the upside, shaky to the downside. And as soon as we are leaving this pattern here, then you can think of a continuation into the trend direction, which was, of course, and strongly to the upside. So this is something, it worked on a lower time frame as well. Okay, daily is still a long-term time frame, but you can see even in this case, it works. And you can see, and that's the good news, it's not necessarily all the time 80%, because at that, this is the wrong point, starting from this low here to the high of that times, going back in time a little bit, you can see, yes, there was a drop. It seems to be a steep one, but it was only roughly 38.2%, which is also in the financial markets a very typical setback size. But you have to expect levels like this all the time. It can be, or typically, it is somewhere around this level, roughly. So a setback into this area is nothing really special. It's a very typical one, and you should expect this all the time. If you can stand this, if you can say, no, it's sad, but it's not a big deal, I can sit and wait until the market is continuing to the upside, then it's okay. If you say, oh wow, this is really bad because I bought here, I don't want to suffer this, then you should use something like a stop, or you think of giving away the position and reopen on a lower price level again, if you still believe in this product. So you can see setbacks are very typical, and also the size is not really untypical. You can see in this case, the last one here, it was a little bit more than 38.2, it was 50%. It is roughly the circle I've drawn before. You should expect like this all the time. It's a non-event, and you can see even on a lower time frame here, measuring this, you can always see this one. And even if you just check the last here, it's always going into this thing. So you can see this is a very typical one, and having this in our, keeping this in mind, let's say it like this, then we can expect the whole market move we've seen here from the lows here in the early 20s, March 20, and the end in April 21. The 38.2 level is still a little bit deeper, so or lower on lower prices. So we need to expect or keep in mind that this can easily happen, that the market will continue to this level. We also have some other indications for this. For example, some other highs here. So this is giving us something like a support. This not necessarily is turning the market. Don't believe, there are two lines, the market needs to go there. No, they are not magnetic. And when reaching that area, they definitely will turn. No, this is also not happening all the time, but at that point, many market participants will say, maybe I can slowly restart buying, or I should stop selling this market because we reached some target levels here. So this may turn the market and give higher price levels. The funny thing is, now we are coming on a lower time frame, and some people are, of course, following the tweets and the information we've seen, and we read from Elon Musk, saying, we are selling things, or we are selling our bitcoins, and we are not allowed to buy the Tesla anymore with the bitcoins because from pollution, it's the energy balance and this CO2 emission is too high. This is nothing we want to support. Yeah, but this is driving the market. Yes, but exactly like you would expect. Go to a lower time frame, in this case hourly market. This is the strong move. In this case, it's a down move, and this is the shaky to the upside. And you can expect that the market will continue this movement again. This is a really typical thing. You can always see this. You can see this here in this time frame. If you have this one, some shaky more flat movement here into this, you can expect a continuation. Typical size, same size, maybe more, but same size is a typical minimum movement. Sometimes it's less than that, but it is typical that it is roughly the same size. Sometimes it's way longer. It can be way longer, but typically it is at least around that level. So this is something, even with all these information from Elon Musk and the fundamental ideas or information from the markets or the inflation news or whatever it is, they are all fitting into this general pattern. Which one is the strong move? What is the weaker move? Which one is the strong move? Which one is the weaker move? Weak moves are more or less A, B, C, or sometimes they are shaking several times. Yeah, you can find thousands of these patterns, A, B, C here, and this was the strong move. And this was the strong move, A, B, C, and the continuation. So you can easily use this for your next investments in cryptocurrencies. If you see these patterns, especially with the Bitcoins, you can estimate. You don't know as a proof, but you can estimate what the next market move will be. Direction-wise, you have a clue. Okay, and you can easily see this is even working on really low time frames. You can just wait for things like this, wait for shaky to this side, and say, okay, the strong move was downside. Okay, I should expect that the market will continue into the stronger direction. Or like this one, ABC, and continuing to the into the strong direction. So, having this in mind, what can we expect? Seeing the big picture, because I don't want to give you an idea what to do in the next few hours. This video is not meant to be like this, and it is not meant to be an advisory for you to exactly do this or that. It's not possible. I cannot give you a personal advice because risk, time, money, whatever is different with all of you guys. Everybody has a little bit different approach of that. Some want to stick with the market, want to have a big pocket and say, hey, I can handle this anyway. Please just keep my ideas in mind for your own trading decisions, what you want to do, and maybe this is helping you to give a better idea what you can expect with the market. But coming back to what we've had so far, going back to this here on a daily chart, this is what we've seen here on an hourly chart. And I mentioned before, very often you can expect that a market is continuing if you have a movement from here to here. And then you have a counter move like a shaky one here, you can expect something similar. So you can roughly say same size like this. You can expect something like this again. So this is also leading us into the area of 42,000. Just read the numbers here, that's better than my English. 42,000. This is a very typical target for a setback like this. And as long as all the counter moves here are not strong, but developing in a shaky, in a corrective pattern, you can expect that the market will continue to lower levels here. Only if the market is overshooting, for example, the last intermediate high here, then you can say, yeah, we had an ABC pattern to the downside. The strong one was to the upside. We can expect that the market is continuing into the direction of the strong side. But for that, we need to overshoot this level roughly below 60,000. Where we are now, there's no indication that the market is giving us any strength at this very point. So definitely a level of 42,000 is a non-event. It's a really, really typical. You should expect that this will happen. Definitely. It is not, you should expect this can happen, definitely. It's really important to say like this. It's not, it will definitely happen, but you should expect this definitely. So if you can live with a setback like this, with your long positions, all is good. You don't need to do anything. If you say, no, I don't want to have this on my account, then you should think what actions you can do. Shall I short the market? Shall I partly or for a short time close my position and reopen when we are coming back. Because always keep in mind, this is a typical setback in this area, but this also can lead us down to 35,000, for example. And if we, however, have the big picture setbacks of 80% again, it can lead us to 20,000. This is something I won't necessarily expect now, but definitely I expect something around 42,000. And from that point, or from any point to be honest, I clearly check, do we get something like this? This is a weak one and give us the strong direction to the downside and a continuation. Or from that point, do we get something strong to the upside and weak to the downside? That's what I say, oh, this is a good opportunity to jump on the bull market again, because this is something we've seen here so many times before on the bull side. So to be honest, it's easy like this. Of course, this is never a 100%. This is like it will be. No, definitely not. But the chances are very high that the market is developing into this within these patterns, because the market is doing so many times. This is generally spoken for all these financial markets, whatever you're trading, the currencies, for example, commodities, single stocks, the indices, but also some, and especially the Bitcoin, for example, here works quite well with this. So I hope this helps you. This gives you a good idea. If you like what you've seen, give a thumb up and press the subscription button. I would really appreciate if you stick with me. I will do more and more videos in the future, so I'm looking forward to seeing you again. Stay healthy, trade successfully. Seeing you soon.